Kitco Mining special coverage of BMO's 33rd Global Metals, Mining and Critical Minerals Conference is brought to you by First Majestic Silver.
A new direction for Gold Fields. This is Paul Harris for Kitco Mining at the BMO Metals and Mining and Critical Minerals Conference in Hollywood, Florida. And joining me today is Mike Fraser, CEO of Gold Fields. Mike, welcome to Kitco.
Hi, Paul. Good to see you with you and good to spend time with you today.
Well, thank you. Now, you became CEO in January just a few short weeks ago, so congratulations on your appointment.
Thank you.
What is your vision for Gold Fields? In what direction do you want to take the company?
Look, I think firstly I'll just say that Gold Fields is a company that's got an incredible history. It's 130 years plus old that's been around, got great technical bench strength. And what it has been able to demonstrate for many, many years is a disciplined way to managing the business, to growing it, and to finding that right balance between returning money to shareholders, investing in the business, and creating a sustainable future. What I'm really looking forward to creating with Gold Fields is a business that is recognized for being a responsible miner, for being disciplined in allocating capital, and disciplined about growing and sustaining our business for the long term.
Okay, I mean, that's all well and good to say, but executing on that, I imagine, is quite a challenge.
Absolutely. But at the end of the day, it starts with the people inside the business and building relationships with our external stakeholders that we need to help us to sustain this business going forward. At the end of the day, we know that we're mining other people's resources primarily, and the better our reputation is at doing that, and the closer we are to the purpose of what we stand for, the better we will be able to find those opportunities to grow and sustain our organization.
It's been an interesting couple of years for the company in many different ways. The company lost out on Yamana Gold and the Canadian Malartic, parted ways with the CEO, then entered into a joint venture to develop the Windfall project in Quebec, and more recently you've sold positions in Asanko and Rosoro. There's a little bit of turbulence there. Why was that such a turbulent time?
Look, I think first and foremost, if we go back to the Yamana transaction, which we were trying to deliver on, it had really good strategic intent. It was about trying to fill that pipeline of post 10 years in our reserve pipeline is how do we add reserves beyond that? We've got look through of 10 years of production. We've got additional resource that we can convert. But it's very easy in our industry to get caught up with what the future holds for us. Because largely we're dealing with shorter life assets. But I think that the problem with that investment is when you get into those kind of mega deals is very often you create a disconnect between the horizon of your current shareholders and what is right for the business in the long term. So that was probably a bit of a surprise. I think what we then did is the moment that we walked away from that transaction and it was the right decision, is we realized that there's other ways of addressing the same strategic objective. And that's when we started adding some of these bolt-on opportunities like Windfall. We got to an agreement with AngloGold Ashanti on the Tarkwa JV. And I think those are much more digestible opportunities where you can then create that balance between returns to shareholders, sustaining the business, and not overly stressing our balance sheets. And I think this is where our industry has been littered with failures in the past, is kind of taking too many big, bold steps that haven't been disciplined and well thought through.
I would agree with you there. I'd also say that the advancing with the Windfall project and the joint venture in Ghana, they're big, bold steps as well, but perhaps for different reasons. Let's unpack those. Windfall, your joint venture partner there, how is that advancing? What are some of the key milestones coming up?
Yeah, fantastic. So firstly, I'll just kind of slightly disagree. I think whilst they are bold steps, they are fantastically value accretive opportunities. And whilst there's a lot of task in them, there's not a huge amount of risk for the organization in terms of the step outs that those are. But what I would say is that Windfall, for example, is a great opportunity. We're partnering with Osisko Mining. It's going to be a 300,000 ounce mine for the next decade. But what more importantly that comes with is a huge exploration land package, around 400 square kilometers of opportunity there for us to go and extend the life of this asset. The key milestone for us is getting the environmental impact assessment approved by the government, which will be Q1 of 2025. We would then expect during 2025 for us to formally approve the project through our separate boards as well as the combined Windfall board. It'll be about 18-month construction period for the mill and processing facility, which should then put us in position to have first gold at the back end of 2026 or early into 2027.
Okay. And with the project in Ghana, the joint venture in Ghana, how is that advancing? What are some of the milestones coming up there?
So the one thing about that project is we know that this is one of the very unique opportunities in our industry where 1 + 1 actually equals 2.5. And for example, when we put these two assets together, we actually unlock reserve that we would not otherwise have been able to mine. What this does do is it extends mine life for up to 18 years. The key issue for us is we've got two pieces of work underway. One is the development of the integrated mine plan, which we are busy with AngloGold Ashanti. Secondly, as part of that is actually coming up with the structures that will oversee and govern that joint venture. And then the third element, not least of which, is getting formal approval from the government of Ghana for the integration. We've been in discussion with them for a period of time. I was in Ghana 2 weeks ago meeting with the key officials and members of government, and we're in a live dialogue on that. One of the slight complicating factors, it is an election year in Ghana this year, so we're fully conscious that that creates a little bit of complexity. But to be honest, even if we don't do the deal right now and it takes us another 12 months to implement, the value is still going to be there. So it's not like we're going to destroy value at this point in time.
Well, one of the things I think is very interesting about these two transactions is that they're both partnerships. And it seems the mining sector in general is moving more towards partnership in terms of development. And, as you say, the 1 + 1 equals 2.5 or greater. Whereas in the past, miners tended to not want to talk to each other, not share, not collaborate.
Yeah.
And that's perhaps where some of the vices in the sector came. How important is partnership and collaboration going to be for the sector going forward?
That is a great question, and I actually fully agree with you. I think that's something that as an industry, we haven't been that great at collaboration and partnerships, and generally we've always wanted to own our own turf. And I think we have to take a leaf out of some other industries, and you can notably talk about the oil and gas industry, which has generally been quite good at farming in and creating shared risk. And so I think that's something that actually makes a lot of sense going forward. And but it's important that you set that up for success right up front. And so think about how you want to manage that and choose the right partners to partner with. But then again, there are opportunities where actually unwinding some of those makes equal good sense. And so, for example, we had an investment with Asanko where we had a 45% of that mine that they're operating in Ghana. And again, given our focus, it made perfect sense for us to unwind that, roll it back into Guyana, and give them the opportunity of unlocking the full value of that asset. So I think there's going to be seasons for different investments, but the premise of partnering and finding more collaborative ways of unlocking value is absolutely, I think, something we're going to see a lot more of.
Okay. Now, before Windfall and Ghana become big things for the company, you've got the Salares Norte development in Chile underway, nearing its completion, about to enter production later this year, at some point this year. What is its status, and what are the company's expectations from that project?
Look, Salares Norte is a fantastic deposit, and it's going to be a superb asset for the company. And again, I just want to highlight the fact that this is an example of what Gold Fields does really well. Gold Fields discovered it. They took it through the study phase, they committed to the development of this asset, and they're going to be the operator of the asset. And we're going to continue to explore the nearby land package just to see if we can enhance the value of it. But if you look at it from a production point of view, this year we're going to deliver 250,000 ounces. Next year we'll deliver 580,000 ounces. 2026 will be 600,000 ounces. Over the life of this project, in the first 5 years, it'll deliver those ounces at $790 per ounce. Over the full life, at around $820 an ounce. This is going to be massively dilutory on the overall cost base of the company. But more importantly, at these kind of prices, and I'm kind of a gold bull, not just because I'm in the industry, but actually we will generate huge cash flow out of this operation, which will then go either into our treasury and will either be used to continue to invest in the business, returning cash to the shareholders, et cetera, et cetera. So I think it's a great asset, and I think we're very fortunate to have it in our portfolio.
With the gold at $2,000 an ounce, the timing is absolutely perfect in terms of bringing in new production.
Absolutely. I just wish I'd had it 6 months earlier.
Okay. Now, just before you were appointed, the company took out a 500 million Australian dollar sustainability linked note. What are some of the key things in terms of your sustainability goals, your decarbonization goals that you're aiming at, and how are you going to get there?
Fantastic. We've got 6 very clearly defined ESG commitments through to 2030. 3 of them relate to people, so safety and community, and 3 related to environment. One of the key ones for us is actually about decarbonization. So we've committed to a 30% net reduction in our carbon emissions off our 2016 baseline. This year we are 4% of the way, so it's still quite a bit of the way to go, but 12% off our adjusted baseline if you go back to 2021. We are continuing to invest in decarbonisation. This year we have just approved $195 million towards a renewable grid at St. Ives mine in Australia, and that will reduce their electricity intensity by 73%. So 73% of electricity will go to renewables. The added benefit is it reduces the electricity cost by half. To that project. And so there's a lot more work to be done, but we are clearly making strong commitments on our decarbonisation journey.
Now, decarbonisation and the overall sustainability aspect is one of the tools that gold companies and miners in general are using to try and garner greater investor appeal. What else can gold miners be doing to generate investor appeal?
Look, I think that one of the biggest things that we've got to do is really get the credibility on being seen to be good allocators of capital. I think if you go back a couple of decades in the gold sector, everyone spoke about the gold premium and something that investors were willing to take a bit of a charge by having the insurance of access to gold ounces. I think that world is changing. There's fewer and fewer specialty funds around. And I think we still have to compete on fundamentals, and there's no cheap money, certainly investing coming in, or no free money. And I think if we can demonstrate that we are good, disciplined allocators of capital, and that we take our shareholders along the journey on reinvesting in our business, then I think we will be recognised, and the sector hopefully will attract more interest in us. I think the other thing is that there definitely are. There is work underway on looking at how we can make gold a more interesting asset class for investors and asset managers, and that work is certainly going on under the World Gold Council.
An interesting way of phrasing it. How can you make gold a more interesting asset class? What are the things that are going to spark that interest?
Look, I think the first and foremost is just acknowledging that you've got gold as a protection for high inflationary environments. It's certainly in periods of uncertainty that exist in the world. And I think asset managers just need to find a way of ensuring that there is a very clear line of sight to a transparent tradable market for bullion, which doesn't always exist.
Are there still too many gold companies in this sector? Is this more consolidation?
Look, I think there's definitely, if you look at the sector, there is a huge number of medium-sized and junior producers around the world. And I think if you look at the pricing of those assets, you would argue that there's definitely an opportunity for consolidation, because there's a clear line of sight. As you consolidate, there's ratings are correlated to size. And so I would expect as a natural course of evolution that we're going to see more and more consolidation and emergence of consolidated plays. And I think the issue sometimes is we need to get over some of the personality factors, and the social factors often are the biggest obstacles to consolidation.
Gold Fields obviously got its plate full at the moment with your own pipeline, but do you see a lot of opportunities out there of some of these companies that are perhaps undercapitalized, that are trading at low valuations? Are you sort of anxious? There's a lot of opportunity there we could take advantage of if we had more bandwidth.
Look, I don't think it's the bandwidth that's the issue. I think the issue for us is making sure that we are always seen to be sound and disciplined allocators of capital. I always say that we don't necessarily need to be the biggest by any means. Our opportunity is to be a very good producer in the kind of production profile that we offer. But what I do want to do is to continue to improve the quality of my portfolio. So we'll always be looking at ways of trying to improve our portfolio, adding in new opportunities like Windfall that we dilute the exposure of older, longer dated assets. And I think that's really how we'll continue to play in this area.
Okay. Now, so wrapping up, Mike, what are some of the key goals or milestones that you want Gold Fields to achieve this year?
So this year it's very clear for me. First and foremost, we want to make this a safe year. We had 2 fatalities last year. We had a fatality on the 2nd of January. So we're working very hard to reset our overall safety performance. Secondly, we need to deliver Salares Norte in line with our revised guidance. That's really key for me. Thirdly, I want to make sure that we deliver on our market commitments. We make strong commitments on production and cost and capital. We need to deliver on that. And then probably thirdly, I want to advance our other growth projects, Tarkwa, Iduapriem, JV, advancing our Windfall project and looking at other ways of filling the pipeline, not for today, but for the future.
Well, I wish you the best of luck with that, Mike. Thank you very much for joining us today.
Thank you very much, Paul. Nice chatting to you.
And this is Paul Harris for Kitco Mining at the BMO Metals Mining and Critical Minerals Conference in Hollywood, Florida. And if you like what you see, don't forget to subscribe.
Kitco Mining's special coverage of BMO's 33rd Global Metals, Mining and Critical Minerals Conference is brought to you by First Majestic Silver.